All right. Hello, hello, hello. How is everyone doing? Let me see. Let me know if everyone can hear me, if everyone can see me as well. Please, please, please. Let me know. Hello, hello, hello. Good evening. Good afternoon. Good morning for some people, I imagine. I'm not sure what is the local time in your area. We have people from all over the world. Very happy to see everyone again. Everything is perfect. Love to see it. Love to see it. It's 11:30 p.m. in India. Please adjust the live stream timing. I'm sorry, my friend. I'm sorry. I'm very happy to see the dedication, though. Thank you for that. Thank you. It's a bit blurry. Yeah, the video or the camera, since it's connected through my computer and it's not recorded separately, it's always going to be a little bit blurry. But the chart should be fine. The chart should be fine, but the camera might be a little bit blurry. So, you know, good evening, everyone. Good evening. Good afternoon. It's 1 p.m. in my my area right now. 7 p.m. in Nigeria. Love to see it. Love to see it. Can see and hear you. Perfect, 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 perfect. Love to see it. All right. All right, all right, all right. Indonesia, Pakistan. India, you're getting handsome day by day. Thank you. Thank you. I saw Cuba as well. Very nice. Very nice. From Dubai. Okay, okay. Nice, nice, nice. South Africa, of course. 2 a.m. in the Philippines. That's some real dedication. 8 p.m. in South Africa. Nice, 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 nice. Hello, Be Will. From Ivory Coast, I imagine, right? I think that's the flag from Ivory Coast. 1 a.m. in Indonesia. Okay, okay. All over the world. From Chile. Argentina, 3 p.m. Nice, 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 nice. In the gym, okay. Getting the gains in. Love to see it. The physical gains and the mental gains. Okay. Love to see it. Yeah, I have a couple of books here. Couple of books. I'm a watch lover, so I like to read books about it as well. You should grow your beard, my friend. If I could, I would. When is the bald clinical Arjo coming back? I'm not so sure, my friend. I'm not so sure. I would love to. I would love to. I'm not so sure. I'm not sure. From the Netherlands, Michael. Love to see it. Colombia, of course. Love to see it. Nice, 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 nice. Welcome, my friend. Welcome, welcome. Let's see. Since I joined the MMT, I made my phase 1 from -7% to now +9%. That's insane, my friend. And that's all credits to you. That's all credits to you, my friends. Why don't we have a fair value area without a fair value gap? Because it doesn't show momentum when we don't have a fair value gap. So it's that's important to understand. First stream since a long time. How have you been? I've been great. Thank you. Thank you for being here again. Thank you. Thank you. It's been the second stream since a long time. Kevin De Bruyne. I wish I was that magical at football. I'm not. I'm not. I'm not. About time. Exactly. I'm waiting for Arjo's World of Fair Value Gap. We have to wait a little bit longer. I'm sorry. I hope next Saturday. We're in the final phases of doing certain things, etc. So the video is actually ready, but I'm giving feedback on the video, what I think should be better, etc. And then hopefully next Saturday. I hope. Barcelona is doing great. The Hansi Flick effect. The German effect. It's crazy. Would you recommend some good books, please? I really like Reality Transurfing. I really like Deep Work as well. A really interesting book. If you're interested in doing case studies, for example, you're trained. Deep Work is definitely something you should check out, in my opinion. Bali. I know some Bali. Yeah, I know Bali. Is December good to trade? Actually, we have interesting data around that. We're going to go over a few things today. Let me grab it. Here we have it. Let me see. There it is. So you can ignore my very ugly handwriting. So I hope you can somewhat read it. It says elections at the top right there. Well, all the way at the top it says Study Sunday, then elections, because we have elections next week in the US. So that's important to understand. Then we have consolidations right there. That's the main topic that I want to go over for this Study Sunday, essentially. And consolidations, we can understand them through fair value gap, 2-candle rejection, which is, I believe, I'm not sure if I've gone over that in YouTube itself. And then we have unusual right there. That's the things that I want to go over in today's live stream as well. And of course, we'll go over questions. First of all, we'll go over elections right there, which is very important to understand. So we actually, someone mentioned or someone asked, is December a good month to trade? According to our data that we have and that I have collected myself, December is the lowest volatility month. May is even below it. So May is even less volatile. Then you have December, then you have January. So December and January are very low volatile months. Now, it's important to understand that because when we talk about trending conditions, we are talking about mainly volatility as well. So the more volatile a month is, the more likely it is to also create some trending conditions. That's important to understand. So that is, according to that data, we could make the argument that December might be lower probability. Again, lower volatility does not always mean that it is lower probability because you might still have very good conditions. But as a general rule of thumb, yes. Why don't you speak Arabic? Is that your name or is that? I don't know. I'm sorry, my friend. I don't speak Arabic. Let's see. Low probability week because of the election and big three. So both ends of the week are screwed. Yes, very, very true. With that being said, let's dive into the forecast as well. For everyone waiting for it, let me see if this works. There it is. All right. There it is. So let me first, before we do anything in the chart, let me show you Forex Factory and the economic calendar right here. So this is important to understand because there's two things that you should be paying attention to right here. And that is, first of all, we have presidential election right there. This is going to mess with the charts. So after that, we also on Thursday have FOMC statement right there, which is also very important to understand because that's one of the big three news events. So presidential election and FOMC statement in one singular week, that's not looking great. So right here, for next week, in my opinion, heading into this week, this for me is not a week where I'm going to make most of my profits. No, absolutely not. This is a week for me where I want to see what I did in the previous weeks, how I did, how I can improve as well. Can I do some case studies? Because now I have the time to do some case studies because the time right here is not necessarily agreeing with the fact that we might want to continue higher or continue lower. Well, that could happen, but the overall delivery, the price action might not be that great. So for this week, and heading into next week, to me, it's not that interesting. And I would advise you can take a look at the market. Of course, I won't force you to not do anything or something like that. But you should be aware that we have elections and that we also have FOMC statement later on in the week. This is not the best week when it comes to news. Very important to understand that it's go into it with very low expectations. Let's put it like that. Okay, then right here, we'll take a look a little bit at the market as well. Again, to me, this is going to be a low probability week, most likely, and not the best week. So keep that in mind. That's very important to understand before you do anything. On the dollar right here, we saw, and this is something that I want to go over as well, consolidations right there. So if I show you that right there, consolidations, because this has to do with it. And the unusual part right there, this has to do with it. What happened on the dollar right here throughout this week. Because if we take a look right here on the dollar, we started the forecast last week with this daily value right there. We had a sting into that. We continued higher from it. We reached the context high right there. That's important to understand. We also had reached, or we could reach this target right there, which we can still reach in my opinion. But what happened right here? If we go into the 4 hour, then we see that we sweep this high potentially, meaning that we have a bearish fair value gap created after trading above the high right there. A very aggressive move lower, Monday right there. Now right here, In the MMT, we mentioned either, or well, in the MMT, we mentioned this 4-hour value gap right there is extremely important. Why? Because if we disrespect this, we might want to continue higher overall towards that swing high right there. Or if we start respecting this, we might want to continue lower. It will set the tone for the week right there, this 4-hour value gap. And what happened afterwards? We swept this high again right there. When that happened, and I imagine a lot of traders were interested in looking at shorts, were interested in whatever they might be looking at that moment in time. In the MMT we mentioned, that is low probability because that is unusual. Why did it sweep that high twice? That should not happen. So to me, that was, and I specifically mentioned in the MMT, that is a sweep to potentially consolidate, to create ugly price action. That is not a sweep to aggressively move lower. And what we saw is ugly price action and a consolidation, and later on in the week after NFP, we start to continue higher again right there. Now, I think overall, I'm still bullish right here on the dollar, and I still think we can look for higher prices. Will the delivery be very nice? No, most likely not, because we have election, we also have FOMC statement. It's not great right there. But I still think we can continue higher towards this high right there as well, and towards the weekly swing high right there. I personally, and I want to emphasize on it again and again and again throughout this live stream, I will personally not be looking at any trade IDs. That's very important to understand. So right here, if we then take a look at the indices, what do we have? Overall, also not the biggest fan of the indices right here, if I'm being honest. If you struggle in general with finding high probability and low probability conditions, then the current conditions right here is not the best to trade. And it's better to just wait and see what the elections and what FOMC statement does, to then afterwards potentially get involved right here. Because on the higher time frame, for me, so taking a look at the weekly, taking a look at the monthly, for me, I'm still bullish on the indices right here. So I would still want to see higher prices. But we have just been consolidating ahead of the elections right there. So to me, this is then also not super interesting to look at shorts or anything in general. So I would personally like to wait right here. Now, if we do take a look, some of the indices right here have created daily fair value gaps. Those daily fair value gaps will again set the tone throughout the week. They will be very important to see what we want to do throughout the week right there. So pay attention to those right there. YM also to me, not super interesting. So for everyone who was expecting a very detailed forecast right here, this is part of the forecast as well. This is part of trading. It's very important to understand. Part of trading is also, well, most part of trading is staying out of the market. And right now, next week, in my opinion, it's a time to stay out and not do anything right there. Very important. All right. So for the indices, moi. For the majors right here, let's see what we have. So this is something we talked about in the breakdown actually during the MMT breakdown. And there is a significant, well, it's very important to understand why the previous 2 weeks, so not the week that we are currently in, but the previous week and the week before that were high probability. This is week 42 and week 43 combined in this gray box. That was nice price action. Afterwards, we start to consolidate. So this week was a big consolidation right there for the most part. So there's a thought process behind that. And we'll dive into that later on as well. But that's extremely important to understand. So if you're wondering why you're seeing gray boxes on my chart right there, it's because of that. Now right here, what we're seeing is overall just bearish price action. We're creating some fair value gaps. So we also have a weekly fair value gap sitting right there, which we might want to continue lower from. Overall on the majors, I'm still bearish right here. So I'm still expecting lower prices. Now with the election FOMC statement, we might see some messing around to then continue lower right there as well. Overall, it's quite interesting to look for some bearish price action. Very similar, EU. Weekly fair value gap, which we had a sting into last week right there. At the end of the week, during NFP, we saw a rejection right there. Perfect rejection in my opinion. It's part of the 2-candle rejection actually, by the way. Very interesting. We'll also dive into that. So here, we have this daily fair value gap currently going against us. That's something we have to take into account. But overall, main target, these lows right there. So continuing lower. That's very interesting in my opinion. And looks all right. Looks all right. Then GU, let's see. What do we have? What are we doing? All right. Let's mark out the previous month's low right there. See on the weekly. And if we compare GU right here to something like EU, we can see the lack of fair value gaps being created right here towards the bearish side on GU. So that tells us that something like EU is simply a lot weaker and is more interesting to look at trades from if we want to short it. And that's very important to understand right here. That could be quite interesting EU, where GU, not that interesting in my opinion. I would prefer EU. New Zealand dollar, US dollar, if I remember correctly, is also quite weak. And this is also quite interesting to look to trade. So we actually have this weekly fair value gap right there as well. We have reached the target that we have marked out towards the left right there. So this is a perfect opportunity, to be honest, to sweep some of the highs, sting back into the weekly value gap, to then continue lower right there. Could be very interesting. Keep an eye on it as well. Let's see if we have some targets to the left. Main target right here as well, but more towards the left. Let's see. Let's keep an eye on those lows right there. Interesting. Quite interesting price action, to be honest. US dollar, Canadian dollar reached the drawn liquidity, had a sting into the daily fair value gap. Very nice again. And the reason why the economic calendar is quite important to understand right there, because we were able to spot this even before the fair value gap was created last week. Very interesting. Okay, now, right here, not the nice price action afterwards. Let's see on the monthly and the weekly, what are we doing? Just taking this high then turns into a fair value area. And on the daily, again, not the nicest price action right here. The lack of fair value gaps make me not want to trade this. I would prefer, again, something like EU, New Zealand dollar, US dollar, and even Australian dollar, US dollar right there. US dollar CHF had a sting into that weekly fair value gap. Now we can look to continue higher towards that swing high, towards that target towards the left right there. That does look quite interesting overall. So bullish throughout the week right there. US dollar JPY. Let's see. A weekly fair value gap created right there. Let's keep an eye on that. Let's keep an eye on that weekly fair value gap. That could be quite interesting. Metals right here. Silver and gold. So silver and gold both have a fair value gap that they are trading back into right there. Now the thing that I don't like right here is that we have a very aggressive move back into this fair value gap. So to me, this right here is not super interesting unless we start to disrespect this daily fair value gap right there. So when we trade back into it right there, we might have a rejection, wait for the rejection. Once the rejection is over, we start to continue higher again, create new 4-hour value gaps to continue higher, for example, then start looking for higher price. But in the meantime, I would want to wait right there. Gold, let's see. So on the weekly, we also have this weekly fair value gap and we have this weekly fair value area right there as well, which we could trade back into. Let's see. And again, quite an aggressive move. So I'm expecting some lower prices right here on gold as well to then potentially continue higher. Bitcoin. So Bitcoin, I'm expecting the elections to push Bitcoin higher towards an all-time high right there. So right here, let's see, it has quite a deeper trade right here, but I'm expecting the elections to make Bitcoin push higher right there towards that all-time high. Now, of course, we would have to see if it really wants to do that and if that will happen in the first place right here, but I'm still expecting Bitcoin to move a little bit higher towards that all-time high right there. So I'm not expecting lower prices just yet. Not yet, at least. All right, crude oil. Let's see. Yeah, this price action, to be honest, is also not that great. If we take a look at the daily right here, we saw this daily value gap. At first, we're respecting it, and afterwards, we just slowly start to climb higher again. It's not great price action right here. Not that interesting, and it's just a bigger consolidation right there. And not that interesting. Bank Nifty, also not that interesting, in my opinion. Last week was quite interesting, but then all of a sudden, we start disrespecting those value gaps right there, and here it starts to consolidate again. So overall, it's not looking that great. And this is something that we went over last week. Because last week we touched on, good weeks, high probability weeks, and low probability weeks. And it's important to understand that we mentioned as well, these weeks are just going to be lower probability, are just not going to be that great. And that's exactly what we're seeing. That's important to understand. Let's see if we have any questions as well. Feel free to ask me anything. Did you trade CHF? Yes, I took a trade last week. Or this week, actually, the past week. And I took a trade on CHF JPY. I'll show it to you. Right here. CHF JPY to me was by far the highest probability pair that we saw throughout last week. Was very interesting. Was very high probability in my opinion as well. Now, there's a few things on CHF JPY which were not super great. We were in a third candle of a weekly fair value gap right there. Now, what happens when we create a weekly fair value gap or any fair value gap? Usually we see a ping pong effect, meaning we have an expansion, we trade into a premium array, and that premium array will cause us to trade back into the fair value gap to then potentially continue higher right there. So what we see right here is that we sweep the previous week high to then trade back into the weekly value gap to then potentially continue higher. Now that previous week high is on the daily a swing high. So let me delete everything. This right here is a daily fair value gap. Then this right here is the context high, the swing high, which is also the previous week high right there. So here on the 1 hour, we had absolutely beautiful price action right there. Right there. We had an opportunity with that fair value gap. Now my entry was, let me pinpoint it exactly. My entry was, let me see, it was around there. And it was covering these bodies right there. It was a 1 to 2. It was a break-even trade. It did not hit take profit. Very unfortunate right there. And this is why we mentioned so many times, it's very important to take into account the context high right here. Because the context high right there is, if we want to continue lower, we will sweep this exact high. So that high will be used to then continue lower. So we will sweep the high to then continue lower. Happens very often because of the liquidity reasons. So right here, that's exactly what we saw. That's ideally why I always want a 1 to 2 within the context right there. Did not happen. And it was a break even. Bit unfortunate. Could have definitely been a winner, but it is what it is. It is what it is. What can we say? Let's see. 1 to 1 or 1 to 1.5 RR not worth, I suppose. It can be worth it, but if you're starting out, I would advise to just stick with a 1 to 2 RR and see if you can master that. Is risking 0.1% per trade on first 100k prop account too conservative? No, in my opinion, it's quite good because you're most likely, and to set your expectations correctly, your first prop account, you're most likely going to lose a lot. So instead of losing accounts simultaneously, try to not lose an account and keep your drawdown as minimum as possible and then learn from those mistakes and from those losses. That's important. So, yeah. Can you explain the ping pong effect of the third candle? For sure. So what you'll notice, and this is extremely valuable in my opinion, is you will see very often, doesn't happen all the time, and it won't happen all the time, but very often you will see fair value gaps being created and being traded back into due to previous PDRs. So if we want to continue higher, if we continue higher right here, then we will have premium arrays towards the left. Now these premium arrays towards the left is what I call resistance areas. Those are not part of order flow and they are also not something you want to trade from. They will just be a bump in the road if we still want to continue in that direction. So if we want to continue higher, this is a bump in the road, meaning it will provide a rejection right there. And then at the next premium array right there, it will provide again a rejection. And then a discount array will push price higher again. So it's constantly ping-ponging between the premium arrays, the ping, and the discount arrays, the fair value gap that creates the pong to continue higher right there. So opposing PD arrays, and what are opposing PD arrays? Opposing PD arrays, if we are bullish, discount arrays are holding. So premium arrays are the opposing PD arrays in a bullish trend. That means that if we continue higher, those opposing PD arrays will be resistance areas. That's where we will oftentimes create fair value gaps to trade back into it to then continue higher. So right here, we see this fair value gap gets created and we start to consolidate when we reach this pre-ray right there. So we start to trade back into it to then continue higher again. Now here, we start reaching fair value gaps, fair value area as well right there, even the previous week high right there. A perfect opportunity again to consolidate, to then trade back into the discount ray, to then continue higher. Now this happens extremely often. So you will see this, well, I would argue almost anywhere. And what we said last week, for example, was pay attention to this low. Because what happens when we reach this weekly swing low, there's a perfect opportunity to create a ping pong effect to trade back into the weekly value gap to then continue lower. What we mentioned in the previous forecast as well. So that's very important. That's very important. Let's see. Entry confirmation. Con. That's very important. Let's see. So the question is, I wanted to know that if we are coming inside a daily fair value gap, so what can be the earliest indication that we might respect or disrespect the fair value gap? That's simply your entry confirmation. So if we're coming into this weekly fair value gap right there, we might right here see an entry confirmation on the 1 hour, whatever it may be. That's the earliest indication. If the entry confirmation forms, we might be respecting it. If it doesn't form, we might be disrespecting it. Now there's another method to that, and that is right here, two candle rejection. So let's dive into consolidations right there, because consolidations are extremely important to understand high probability conditions and low probability conditions. So we already mentioned one thing, which was the unusual part right there. And the unusual part, what I mean by that is when something unusual happens that's not supposed to happen. So imagine that you are able to dictate price action and you are able to rule price action and you can say what it wants to do next. Then when something unusual happens that's not supposed to happen in your mind, in your ID, then that's a sign that we are potentially consolidating. So what I mean by that is here, we swept this previous high right there. Now we had this fair value gap. Up until that moment, if we want to sweep that high right there, that's perfect, that's usual, so that's normal. Then here we start to trade back into the 4-hour value gap. We don't respect it, and again we sweep this high. If we are disrespecting this fair value gap, we should look to continue higher instead. So what happens? We sweep it again. That's unusual. So unusual price action right there indicates that we might be consolidating right there. Now, not only that, because when we talk about consolidations, it is also fair value gaps. And this is something that I have mentioned, well, arguably the earliest thing I've mentioned regarding consolidations, and that is very simple. It is when bullish fair value gaps and bearish fair value gaps are both not following through, then that is consolidating price action. So what that means is the following. Here we have a bullish fair value gap right there. So our first assumption is a bullish fair value gap will create a new bullish fair value gap and will continue higher right there. That is following through. So a fair value gap following through is a fair value gap being traded into and creating a new fair value gap from the previous fair value gap. So to give you an example, this fair value gap here is following through. This one right there. We trade back into the fair value gap and it creates a new fair value gap. That is the definition of following through. So here we trade back into it and we don't follow through. Instead, we create a bearish fair value gap. Now this bearish fair value gap also does not follow through and does not create a bearish new fair value gap. So both bullish and bearish fair value gaps are not following through. So that is the perfect sign that we are in a consolidation. So if you struggle with getting caught in consolidations or you can't spot it very clearly, that is the most giveaway sign that you are going to get. Bullish fair value gaps and bearish fair value gaps both not following through. That means we are consolidating. Now next to that, we have two candle rejection, which is a little bit more advanced. We're going to touch on this in a separate video as well. A video after the world of fair value gaps. And I'm not sure if I want to mention it actually, now that I think of it, because people might start copying it. I just thought of that. I'm sorry. I just thought of that. I can already see it again. I get trauma flashbacks when I mention things on live streams and someone takes the ID and starts copying it. And starts to accuse me. The token rejection, we would have to wait. I'm sorry. I just thought about it just now. I'm sorry for that. But token rejection is based on candle signs. We're going to have to wait for that. I'm going to create a separate video on that. I can already imagine myself again in the same situation. I don't want to repeat that. I'm sorry. Let's see. So we can go over a few consolidations as well, which is, you will see this repeatedly every single time. And by the way, the reason why EU and why a lot of pairs are low probability is because of two things. Not one thing, two things. The first thing is price action is not in alignment anymore. So we have been expanding in the previous 2 weeks. After an expansion, what is after an expansion? Well, when we are expanding, we are also creating fair value gaps. So it's time to create retracements back into fair value gaps as well. Next to that, when it comes to news, it's also not ready to expand right there. What does that mean? In these 2 weeks, and for your own study, you start studying what we have in these 2 weeks right there. We don't have any disturbance in news. This recent week, we had a big 3 news event. Big 3 news event is a potential sign of a consolidation. Line that up with a fair value gap also being created right there. That's a low probability week. So a retracement, and you might argue, because I get that argument quite a lot from especially newer traders, is, well, then we can potentially target this weekly fair value gap if we trade back into it, right? Yes, but that is not something you want to do, because that at its core is already low probability. What do I mean by that? You need to view the market from a strength perspective. So the bearish strength is very strong right there. Might be 80% bearish at that moment in time. So the bearish hands are pushing price lower a lot. Where bullish hands might be 20% bullish. It might be just enough bullish strength that we can create a retracement into a premium rate to then continue lower. So right here, what happens when the bearish strength is a lot stronger than the bullish strength, the retracement back into it, into a fair value gap, is always lower probability. So as a general rule of thumb, trading into a fair value gap is always lower probability than trading from a fair value gap. That's very important to understand. So when we start to continue lower, this right here is high probability. And now you can also see, hey, I can now understand why high probability conditions happen so fast, because this might be very fast, whereas this consolidation to trade back into it is very slow because of a strength perspective. Because the bullish side is not strong enough to create a very easy retracement, because every time the bullish price action tries to push higher, the bearish comes in and pushes price lower. This creates a consolidating trend, as we call it in the MMT. That's important to understand. Yeah, 50-50 price action, very important to understand as well. So 50-50 price action is, for example, right here, this is 50-50 price action. The first fair value gap, so you're expecting lower prices from this fair value gap right there, that weekly value gap. The first fair value gap that we encounter right there on the time frame, on the daily in this case, this is 50-50. Ideally, you wait until this one is overtaken, disrespected, to then continue lower. Very important. Yeah, I won't mention it. I'm sorry, it feels a little bit feels a little bit stupid on my side. But yeah, otherwise I can already see people are starting to create videos around it, and then I'll get emails, etc. It's I'm traumatized. Let's see. Yes. It's also a market maker model. Yes, correct. So the funny part about the MMT and about in general, again, when I also mention MMT, I also mention the YouTube right here, everything that we do, is that every single concept, name a concept, and it's involved. It's involved in our trading plan. So that's the beauty of trading, in my opinion. That's the beauty of simplifying things. Simplifying things is not simplifying things for the sake of just making it more simple because we are idiots or something like that. No, simplifying things is understanding how can we take 1,000 things, merge them into one thing, and they are just as effective. That's very, very important. So right here on the weekly, this context area from the weekly fair value gap towards that first discount array, that swing low right there, this creates a market maker model area. Consolidation, clear price action on the right side. Context areas. Beauty. Once you start seeing it, it's very interesting. Yeah, true, Pip Sniper. True. Only mentor that may be profitable via YouTube content. Love to see it, my friend. Love to see it. That's very nice. That's very nice. All credits to you. Talk about placement of stop loss according to fair value gap entry. Very interesting. Very interesting. Very good questions today. You have good questions today, my friend. That's very interesting. Because in the world of fair value gaps, I'm going to mention something. And in the world of fair value gaps video, that is going to be online, I'm not sure. I hope next week's Saturday. I'm going to mention that you want to cover the order flow lag. So if we create a fair value gap right here, you want to cover the swing high right there because that's where it's not going to trade back into. Now, when you start getting a little bit more advanced, and this is a whole video separate on its own, essentially, you start to understand how far can we truly retrace, because that's stop loss placement. That's what it's about. So right here, you will notice as well, why did I have such a weird stop loss placement right there on CHFJPY? Because on the 1 hour right here, we have this fair value gap. So if I were to enter from that, it would have been below that low right there. Now this low that's so much wasted space that you're turning it almost into a position trade. So a lot of times when people place their stop loss, they might be day traders, they might be scalpers, but because of their quote unquote, not necessarily bad, but just uninformed, let's put it that way, stop loss placement, and they might have a huge stop loss because of that, then their day trade, their scalp, turns into almost a swing trade because of their huge stop loss placement. So now, look at the difference. Now, if I had a 1 to 2, it would need so much more price action in my favor. This is not a day trade anymore. So right here, you need to understand for your stop loss plate, how far can it truly retrace? Well, at that moment in time, and keep in mind, I did not even enter on the fair value gap. I entered before the fair value gap was even created right there. Why? Because I understand fair value gaps. I understand high probability price action. Why? Let me show it to you. At this moment, on the 1 hour time frame right here, if we are going to continue higher, keep in mind, you're always entering in high probability conditions. So if we are going to continue higher right here, then what happens? We are going to create a fair value gap right there. We have this fair value gap. We have this fair value area. In worst case scenario, we are going to retrace back into the fair value area to then continue higher right there. Because we offer fair value to then continue higher. If we're not offering fair value and we are not creating that fair value gap in the first place, that means it's already low probability in the first place. So I shouldn't even be looking at that trade ID. So then I get taken out. Perfect. Because it's low probability. So my stop loss does not go here, does not go here, does not go here, goes below the fair value area right there. This was my entry right here. And on the 50-minute, you can see it more clearly. This right here is the fair value area, the furthest it can retrace if it wants to continue higher overall. So we create that 1 hour value gap, we trade back into the 50-minute fair value area right there to then continue higher. And keep in mind, this entry was not even here, it was a little bit earlier. It was sitting right there. Because I understand the principles of price action and everything that we do right there. So you need to understand for your own trading, how far can price truly retrace before it becomes low probability? Because if price is going to retrace all the way towards this low right here, then I'm already out to trade, because even if we still continue higher right there, it's a low probability. So most likely it's going to be a consolidation. This is arguably the biggest nugget that you can have on your stop loss placement. Very important to understand. Stop loss placement is a huge underrated aspect when it comes to trading. Very important. And if you struggle with that, go into your own trades. Go into your journal. See, how far could I have refined my stop loss? How exactly did you know that that was the fair value area to watch for? Because that's in the MMT, that's how we objectively define a fair value area. So you can't really select any other fair value area, if that makes sense. That is the fair value area. Yeah. Yeah, SG does trading. That's true. You've already discussed token rejection many times. Unconsciously, I got it after joining MT. Yeah, I have. So a lot of times it's very funny because people might see the YouTube, etc. And I don't explicitly mention everything on the YouTube. But when you join MMT and you see, oh wow, that it's you can see the logic behind things a lot more. And it's very interesting. Very interesting that you mention it, yeah. Why did you not enter on a 1 minute time frame? I'm not a 1 minute trader. So I'm not a scalper. I don't like to do that. And especially when it comes to crosses, by the way, if you're trying to enter on something like CHFJY on the 1 minute, yeah, you're better off not doing that. You're better off not doing that. The spreads, etc., that's not a fun experience. Let's put it that way. Not yet. Could be Ryuzaki, if I pronounce that correctly. So the question is, don't you think Euro US dollar is now bullish, having break of structure on the daily? And the tricky part is, if you don't combine time frames right here, then you can get caught in that. So what have we been doing in the recent weeks, in the recent month? Continuing lower right here. So a lot of a pain point, what a lot of traders struggle with, is ignoring a time frame like this, where all this is a retracement to continue lower into that fair value gap to continue lower. And on the daily, they see this first break of structure right there, or first fair value gap to then trade from it. But this is not high probability because you're going against everything on the higher time frame. So this is just a retracement on one time frame, and on the daily, this might seem like something like this, a full-on reversal. But you need to combine it with the other time frames. So I am still bearish right here. Unless we do start to create new daily values right there and we start to continue higher. I will admit I'm wrong and we might want to continue higher. Yeah, changing bias too fast. And it's for some reason, because I also had this. I also had this in my own trading when a couple of years ago, especially when I was just starting out, it's so much easier to spot a reversal, or at least what you think is a potential reversal, instead of just following the trend. For some reason, our mind spots these scenarios right here a lot easier than just an expansion right there. It really takes training to spot those. It's very interesting, but I struggle with that a lot. I already said everything I needed to say, my friend. SKJ, oh wow. SKJ the man. Love to see it, my friend. Nice. Do you have any particular rule in your playbook about overall pips per week? No, I don't. I used to, people that know me for a very long time actually know, well, what is it, maybe 3 years ago, something like that. I used to calculate every single week. I used to keep on a sheet how much pips it already moved, etc. And then after a while, I just realized, well, it's not super useful, at least not for me. So yeah, I personally don't. It really restricts you in your thinking overall. So I don't look at it. Lekker bezig, Arjo. Thank you, my friend. Thank you. You've changed the game for me. Love to hear it. Do you adjust your stop loss / overall risk management with less liquid currencies? I've been caught out with crazy slippage lately on the miners. Yeah. Watch out for it. Yeah. Overall, the only way I really adjust in that is my time frames that I use. So if you're still on the 1 hour, etc., 4 hour, which I mainly am, 1 hour, 4 hour, etc., you're going to be fine. But anything below that, really watch out. Really watch out. Especially in some prop firms, some brokers, you're going to get screwed over. They're going to screw you over, essentially. That's important. Hello, Trader Law. Hello, my friend. Do you worry about wicks taking you out with super tight stop? I'm never worried about being stopped out, because if I'm worried about being stopped out, I understand that I'm not even trading good conditions in the first place. So if I get taken out, then it's low probability in the first place. So I shouldn't even be looking at that price action. So the least of my concerns when it comes to a trade ID, or when I even look at others that send me their journal, the least of my concerns, the last thing I might look at is your entry, the lower time frame. It's very important to understand, when I start looking at trade ID, the higher time frame needs to be absolutely picture perfect. If that's not the case, then the lower time frame can do whatever it wants. But a lower time frame, an ugly lower time frame, will never be able to compensate, let me put it correctly. A beautiful picture perfect lower time frame will never be able to compensate for an ugly higher time frame, where a beautiful higher time frame will be able to compensate for a very ugly lower time frame. So it's all about the high time frame right there. So to answer your question, no. Started ranting about other things, but no, essentially not. I saw a question about a background on TradingView. This is just a white background, by the way. So the way I did it is, if you double click here, it's a long time ago. The background here is just solid, just fully white. And the grid lines, I have them 0% opacity. So I remove the grid lines and remove the crosshair as well. I just like it more clean. Yeah, I believe everything will be affected by elections, because the US and is at this moment in time, I believe, and correct me if I'm wrong, well, especially the US dollar is the #1 economy. So it affects everything. It's the reason why, if you go into futures, something like the British pound right here, it's always moving the opposite of the US dollar. The same for euro, whatever it may be, it's always moving the opposite of the US dollar, because the US dollar, that's what it's about. So yes, it will be affected. How to select the pairs for trading in the beginning depends. We have two types of traders. Either you're going to be a filtering process trader. That depends on your time zone, depends on how much time you have throughout the day. A filtering process trader is going to go over quite a lot of pairs, quite a lot of instruments. So what I'm personally right now a filtering process trader. Now, when it comes to you have more time, you like scalping more, you like the lower time frame, then you are going to be a flow trader. A flow trader is important to understand. You're going to be focusing on one single pair, one single instrument, because you need to pay more attention to details. You can't be messing around with a lot of instruments, a lot of pairs. So when it comes to flow trading, I would advise always take a look at the indices, because the indices are most consistently volatile. And for flow trading, because you are reliant on one pair, you are going to need a volatile pair. You're going to need a volatile instrument. So indices are really good. Futures traders are a lot of times are flow traders. So it depends. First, we need to make that choice there. Do you ever leave a runner once your trade target is hit? I haven't seen this in any of your vids yet, but I'm new to your content. No, I don't. I used to do it. I used to leave runners, but then I noticed I'm giving myself an extra headache. I'm giving myself extra, well, not necessarily sleepless nights. I'm exaggerating, but I'm giving myself a little bit extra worry for maybe 0.3 RR extra in some cases. In some cases, it just comes back to my break even, whatever it may be. So I just like to have a hard stop. So a hard take profit. So 2 RR, cut it off fully. because that extra leaving 20% on to go for later, it didn't work for me. Let's put it that way. Lekker, gaat lekker. Dankjewel. Thank you. What do you think about XRP? When it comes to crypto, I'm a complete noob. So fundamentals or whatsoever, blockchain, I'm absolutely atrocious. I'm not good at all. But I can take a look at some technical charts for you. Let me see. Well, this on the monthly is a beautiful consolidation. It's not looking great. Let me zoom out a little bit. Yearly, okay. Monthly, weekly. So currently, if the bigger picture is just still consolidation. But right here, we're coming from a sweep. On the weekly, we are respecting a bearish fair value gap, sitting right there as well. We are reaching below this low. So my next target would be this low and potentially even lower right there. Let's see on the daily. Trading back into the fair value area, the nested one as well. So we are about to create daily fair value gap, which I would see lower prices from at this moment in time. So right here, I would still want to see lower prices. But overall, it's a bigger consolidation. So it wouldn't be crazy if we start to continue lower, sweep some lows, and then we continue higher a little bit and do something like this, if that makes sense. Whenever I see clear highs of price action and get in on the 1 minute, I get stopped out like every time. But what is your process there? Because there's a few steps you need to take, right? The first step is actually something interesting that we have is... So the first step is determining what is the clear bias. We, for example, in the MMT, we have an indicator that can help you determine that. This is not to take away the manual analysis. That's very important. You could not even do it in the first place. But this can help you understand what the probabilities are for a certain pair. So is this high probability, is it low probability? Currently, the dollar right here, you can see, and it displays it quite accurately, it's not high probability. It's low probability. 68.8% bullish right there. Really interesting. That's the first step to determine, do you have a good bias? So clear direction in price action. The second step is narrative. So do you have a clear delivery in price action? Because it's not just about, are we going to continue higher or continue lower? Because we're not just analysts. We're traders. We also need to get involved. And to get involved accurately, without getting stopped out, we need to have a good delivery. So bias, narrative, delivery. Then the lower time frame comes in. So what is the process there? Do you go into the daily to then the 1 minute? Like, that's a huge jump, if that makes sense. No, you don't have to. If you use fair value gaps, you don't have to use market structure. You don't have to. Candle colors. I think if we were to sum up the most asked questions of all time, it would be candle colors. Let's see. This is the up candle right here, the body of the up candle. Right there. You would have to pause the video. Then here, this is the down, the body of the down candle. And the borders are both the same right here. And the wicks are also both the same. It's sitting right there. Thank you, Fibon. Likewise, my friend. Likewise. Thank you. It's for MT members. How do we control our psychology? I think psychology, first of all, let me also state that psychology, it's very important to still, of course, understand what you're doing in the market. So we can't blame psychology if we don't have something clear that we need to do in the market. So that's very important to understand. So once you have a trading plan, once you see that trading plan has potential and it works, then we can start taking a look at psychology and if you truly have psychology problems. My first advice would be risk management, because risk management tends to go hand in hand with your psychology. So risk management for me is also psychology. If you're risking a lot throughout the day, etc., then usually that goes hand in hand with bad psychology as well. Then one trade a day, very important. Stick to just simply one trade a day. That's it. Don't do anything else in the beginning. And you could even argue one good trade a week. That's it. And then focusing on your risk management. I think that's very important for your psychology. First, having those things. Let me see. Rose said the copy strategy everybody copying, even the Scandal colors. Let's see. I saw a question, but I lost it. Have you tried using dark theme? Yeah, for some reason, I love dark theme in general. I love dark theme for everything that I have on my phone, whatever it may be, anything, my laptop. But TradingView dark theme, I just doesn't work for me. I feel like I lose the chart, as in I can't see the chart very clearly anymore with dark theme. I'm not sure why. Probably because I'm used to it. You could argue that, Innocent. Yes, you could argue. Yeah. You could say so. When is the podcast coming? I thought about it this week, actually. I thought about it. It's a good one. It's short term, most likely no, not yet. But yeah, long term, I definitely want to. But just a not necessarily a podcast, as in like a specific podcast or like sitting there in front of a camera. Still, it would just be me talking. Potentially even something like this where we have questions and I'm just talking. That's about it. Not something professional or anything like that. A journal notion, you can create a journal notion, my friend, within 5 seconds. All you need to do is create a new page, then create that database. So /database. That's about it. Then all you need to write down in your journal is the pair name, when you took the trade, why you took the trade. That's all the information at first what you need. And that's it. So you don't need a lot for a journal. I prefer market orders. Market execution, I prefer. Not sure why, I just prefer it. I'm not a huge fan of limit orders myself. I saw a question, but I'm trying to look for it, but I can't find it anymore. I can't find it anymore. If you want information about the MMT, by the way, it's just, you can go to tradingmmt.com right there. Tradingmmt.com. And there's also an email that you can, so if you want to send an email, you can also send an email to info@tradingmt.com. We changed the domain. Well, not necessarily changed it, because if you still go to arjo.io, you will get to the same result, the same website. No, they're not the same. Candle science and ICT concept. You could argue they're somewhat related to each other, maybe far distant cousins, but they're not the same. Because of the 1 hour. Because of the 1 hour, Alex. It wasn't a 50-minute entry, it was a 1 hour entry. Pronounce your name. Arjo. 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 A lot of people call me Arjo. Here in South America, everyone calls me Arjo. But it's Arjo. Arjo. It's like a yo at the end. What's up, Machiavelli? Let me see. Uit NL. Zet je confirmatie om erin te stappen. En hoe weet je dat je gedeeltelijk winst kan pakken? Je kan het ook in het Engels uitleggen. I'll explain it in English, yeah. The entry confirmation is either an order flow entry or a sharp turn entry. That's important. So fair value gaps is what I mainly pay attention to. And usually my take profit is a hard 1 to 2 R. That's about it. That's about it. Are you told that fundamentals will follow technicals? Then why the election week will be going to be low probability? Can I explain? So let me correct you in that as well. I mentioned fundamentals to me in the short term follow the technicals. In the long term, technicals follow the fundamentals. That's important to understand. Now, when it comes to something like election FOMC statement, it brings so much volatility to the market that before that time, we consolidate. So because of that consolidation, that makes it low probability, if that makes sense. Your favorite pair. Ooh. If I had to pick one, I think it would be one of the indices. I think it would be something like ES. If I had to pick one that I can only trade, then it would be that one, I would argue. Yeah, Nasdaq is really good to trade alone. For sure, for sure, for sure. If you're a hybrid trader, good question, by the way, Charlie. It's not something I mentioned in the YouTube, but in the MMT mainly. A hybrid trader, you want to do the same thing that we just did, filtering process. But you can, for example, if you see the dollar right here is high probability, you can still go into the 1 hour as well. Where for me, 4 hour daily is really the cutoff. Hybrid, you can still go into the lower time frame right here to find your context areas, if that makes sense. Breakaway gaps are really hard to trade. I can never predict if price will retrace back into it or not. I personally also don't like trading breakaway gaps. So if that helps, I also don't like breakaway gaps. I'm not the best at trading breakaway gaps. I don't like it. In my own trading plan, I notice if I try to trade breakaway gaps, it usually ends up being a loss as well for myself. So yeah, at that point, I just say, okay, I avoid breakaway gaps. I don't trade them, if that makes sense. Call you AJ, perfect. Nice. Yeah, that's what I thought, Charlie. No worries, no worries. I use order flow entry. So as beautiful as an ST can be, I personally actually don't like. It's very interesting. I personally don't like, or well, let me state that clearly. If I require extra confirmation, I like an ST entry. But if I don't want to see extra confirmation, I tend to, the first thing I do is look at order flow entries instead. So it's very interesting, actually. No, I'm not trading butter. I'm not trading throughout the week, most likely. It's very low probability for me. Don't like the price action right here, so I'm just waiting. I'm just waiting. GJ. Let's see, my friend. GBP, JPY. What are we doing? JPY pairs, I'm bullish on JPY pairs. So overall, I still think they can look to continue higher. Here on the weekly, we have reached this weekly fair value gap right there. Not the best price action. In this case, how I would approach it is I would wait for a new daily fair value gap right here to continue higher from it, right there. But overall, I'm still bullish right here on GBP/JPY. So I would still like to see higher prices. Ooh, Elijah. I would have to... I don't specifically mention the words order flow entry, but there is a few videos where it is essentially the same thing. I'm not too sure. You would have to look at any video with entries in the title, potentially. The best entries, something like that. Or at the end of series, at the end of the MMC series or the market mastery, I usually go for entries as well. Something like that. I'm not too sure. I would have to look for you as well. How many trades do you take a month on average? This month, I took 3 trades, I believe. 3. It's not a lot, I know. On average, I believe it's around 5 or 4 trades a month, something like that. It's not a lot. Might change your perspective as well. This month for me was October. For me was 2 break evens and 1 winner. Okay, Hossein, I'm going to answer it fast because it's not actually for the Cube itself. Let me see. It depends on what the first rejection is, Hossein. And if you determine the first rejection, so either the first or the second, the close above it, that's failing, yes. Or at least an ugly. Yes, I fix RR. I do 2 RR, fixed. 2 RR. Do you trade Forex full time? I mean, I also do this, of course, next to it. Could you argue full time? You know, trading Forex or trading in general full time is always a little bit of a nuanced discussion because it's not the same as from a 9 to 5 actually looking at a chart. That's not full time trading, if that makes sense. But other than that, what I do right here I wouldn't do this if I wasn't trading myself, if that makes sense. So I always like to think trading is my main objective because everything else, even though I might spend more time overall relatively seen doing that right there, if my trading doesn't work, then nothing works right there. So you could argue, yes, full time. Good night, my friend. Good night. Good night. Let's see. Love from Iran. Love to see it, my friend. Love to see it. Yes, stick entries. Ivan. Yeah. Ivan. Yes. Stick entries. Correct. Yes, US oil is also good to trade alone. US oil is quite nice. Of course, when you're dependent on one pair or one instrument, something like this on US oil right here, it's quite unfortunate because it's consolidating a lot. But overall, it's all right to trade alone. Yes, for sure. Order book. No, I don't have experience with it. Although something that does interest me is that if I was to do anything besides what I'm doing right now, that does interest me. So I would love to look into it one day. Correct, Antoine. Correct, my friend. Correct. Depends, Josh. Depends. I don't necessarily go break even at a certain RR. I could look at the data to potentially tell you. But overall, my break even is determined based on if we can still return toward my entry or not, if that makes sense. It's amazing how you just see the market and simply catch the probabilities. That's what I'm mastering now. Or not to chase market, but looking for entry, which makes me lose most of the time. Thank you, Morningstar. Thank you. I think that's arguably the biggest struggle of everyone is not necessarily, hey, what's the best entry? What is this? What is that? It's arguably what are high probability conditions and what are low probability conditions to trade in. That's arguably the hardest part for any trader to determine. Because once you determine that, it's a lot easier to trade. All right. I'm going to end it here, team. Unfortunately. But every single Sunday in December, there might be a few days, might be a few Sundays where I won't be there. But every single Sunday, so write it down in your calendar, every single Sunday, 1 p.m. New York local time, we will be live. We will be live here on YouTube. There will be something. We will be live here. And next to that, the videos are also returning. So those will also be returning on a Saturday. Most likely Saturday will be a little bit different time. But 1 p.m. New York local time, every single Sunday, we will be here live streaming as well. Very important. With the forecast, the study Sunday, the topic that we have as well. So thank you everyone for being here. I am going to see everyone at the next one as well, next Sunday. Thank you everyone for being here. Be careful throughout this week. Please, if you in general already struggle with trading, this might just be a week to just do some studying overall. See what's happening. Don't feel forced to get involved throughout this week. This is not the best week to get involved. Very important to understand as well. All right, perfect. Thank you everyone. See you at the next one. Thank you.